we have a presentation on the 2020 audit from Maillie. That's you, right?
That's me.
Okay, go ahead. It's in your court.
Thank you very much. My name is Chris Herr, I'm partner with Maillie. We were appointed as the independent auditors for 2020. Very happy to be here with you tonight, presenting the results of the financials. We have a brief presentation here, just a few slides that really kind of hits on a lot of the most important parts of the audit, at least in my opinion. First page here, summary of the finding results.
This is clearly your fault, Chris.
The auditor's report does express an unmodified opinion on the financial statements. In a layman's term, that's a clean opinion. That's what you want to have on your financial statements. What that essentially means is the statements are free of any material misstatement. They're in compliance with GAAP, that's generally accepted accounting principles. They're in compliance with the GASB pronouncements. Those are all the governmental accounting standard board pronouncements that sort of make up a lot of the rules as to why this statement is the size that it is. There's no scope limitations. We come into the audit with a very lengthy document request list, everything from bank statements to every employee's W-2 to calculations of debt, capital assets, etc. And we do receive everything that we needed to in order to conduct our audit. Non-compliance and findings, we had no identified instances of non-compliance, no significant deficiencies or material weaknesses identified during the audit. If there had been any, we would have issued a separate letter called SAS 115 deficiency letter. There was no such letter this year, so that's all positive news as far as the end result or our opinion on the financials. On the next page, I just wanted to hit on a few of the big estimates that are in the financial statements. The first three there are all related to pension and OPEB, other post-employment benefit plan estimates. These all come from your actuaries. The net pension liability, that first line there, the police pension plan is overfunded by about $12.5 million at the end of 20 versus about $8.9 million at the end of 2019. And what that means is the assets exceed the actuarially calculated liability as of December 31st. A big reason for that increase, we saw those sort of increases at all the municipalities we work at, ended up being a really good year for investment returns. So you had about 3.5 improvement due to that. Investment returns were about 17% on the assets. Employee pension plan, same thing, overfunded by about $1 million, a little over $1 million, improved by about $316,000 from last year. Again, really good investment returns, a little lower there with 16% for your employee pension plan. Minimum municipal obligations, these are the minimum amounts you are required to contribute to the police and non-uniform plan. The police plan just shy of $500,000 for 2020, up about $38,000 from the year before. And the non-uniform plan, $106,000 up from $65,000 the year before. And one thing I want to point out with those numbers is those minimum municipal obligations are calculated based on valuations as of January 1st, 2017 or January 1st, 2019. So that is before you guys made that large contribution into the plans in 2019. Unfortunately, there's always a delay in when the assets and the MMO kind of catch up to each other. The net OPEB liability, these are post-employment or post-retirement medical plans. Liability at the end of 2020 just shy of $15 million. The year before was just shy of $13 million. And that is just a sort of a rolling liability. There are no assets held for those the way there are for pensions. The last estimate down there, capital assets, the cost, depreciation, and accumulated depreciation over the years on your assets. Really no major projects or construction during 2020. Governmental activities, your total assets there at cost are about $28.3 million. Had about $1 million in additions during the year due to equipment and vehicles. Depreciation for the year, $720,000. Your accumulated depreciation is about $17 million on those assets. Business type activities, that's your country club. Cost of assets there, 14.7 million, 400,000 of depreciation for the year, and there's no additions to the country club for the year. Next, I just have a few slides showing some basic, sort of the biggest things that were happening with revenues and expenses during the year. That first table there are the bigger revenues of the township for the year. The top line is 2019, the blue line, the bottom line is going to be 2020. So taxes, 2019, about $10.5 million. That dropped to about 9.1 for 2020. You know, there's a few things in there, the big things being EIT, transfer taxes, real estate taxes. EIT was pretty much flat year on year. Transfer taxes went down about $120,000. Big reason for the drop was real estate taxes. The big thing that happened there was we had that homestead exemption they did for the first time. So that caused a little drop in the tax revenues there. Governmental charges for services is another one of the bigger revenues, although you can see it's much smaller than taxes. That's obviously the biggest revenue in the township. Governmental charges for services 2019, just shy of 1.4 million, about 1.6 million for 2020. A few things happened. Your landfill host fees were up about 240,000 for 2020. Permits, similar to other municipalities I work with, there was a little rise in permits, an extra 60,000 in permits. All that, unfortunately, was offset by the biggest sort of hit every municipality took, parks and recreation. Typically, you had just a little over 100,000 in park and recreation fees. Obviously, with the pandemic, that went down to about 15,000 in 20. So we saw about a $90,000 decrease in those charges for services. Country Club, that third line there, 2019 charges for services were 645,000. 2020, pretty sizable increase, about a 230,000 increase to 870,000. Again, I worked with some other municipal courses as well, and this was consistent. There wasn't a whole lot to do in 2020, so I guess everybody got back involved. Total governmental revenues, that last column there, just in total, your governmental revenues, and this is not including the country club, $15.5 million for 2020, or for 2019, I'm sorry, decreased down to 14.1 in 2020. Again, the biggest driver of that being bills and taxes. Down under expenditures, you know, some of the bigger expenditures you have, obviously public safety is the big one. This drop, 2019 was about 18.9 million. 2020 was about 8.9 million. So almost exactly a $10 million decrease. I think it's about $10,098,000. And really what that is that's that extra money you put into the police pension plan in 2019 that you didn't do in 2020. The interesting takeaway I have there is usually I expect public service safety to go up anywhere from 5 to 10% year on year, just with the escalating benefit costs, salary costs, things like that. When you take out the pension, it was actually very flat, which to me shows good expenditure control in that area. Public Works, Highway and Street, 2.9 million of spending in 2019 versus 4.0 million in 2020. Simply more road work was done. General Government, 2019, about $6.6 million of expenditures, dropped down to about 1.8 million. The big thing there in 2019 was the purchase of the promenade. That's going to be in that line for 2019. The Country Club, expenses dropped $2.2 million in 2019 down to about 1.2 million in 2020.
That's great.
Big things there, legal costs dropped about $650,000 2019 to 2020. And repairs and maintenance, you also had some significant repair and maintenance expenses in 2019, about $300,000 less in 2020. So that was the big reasons for the drop there. Just a couple more slides, just some big picture stuff. Bonds and notes payable at the end of 2019, about 17.7 million. At the end of 2020, we're down to about shy of $13.2 million. Really two components of that. There was $7.4 million of debt payments, principal payments during the year. That's offset by $2.8 million in new debt. There was a new 2020 bond issued that, along with some funds from the township, refunded the 2015 A. And And it's in the financial statement, but the calculations on that new bond, the new bond say future cash flows of about $718,000. Last table there, fund balance. Really break this down into three groups. The general fund, the country club, which is the gray line, and of all other governmental funds, which is sort of that gold line, the top line. Fund balance is the difference between the assets and the liabilities of each grouping. So the general fund, at the end of the year, about $2.7 million in fund balance. That's assets in excess of liabilities. It's about 21% of your annual expenses, equals about 2.5 months of expenditures. That's pretty on point for where I would expect the municipality's general fund to be. That gray line, the middle line, that is the country club. We ended the year right at $10 million of fund balance. That's $9 million of the net value of the assets in the country club, and about $1 million in operating cash. One distinction is the country club does include the capital assets. The general fund and the other governmental funds, they do not. It's just the method of accounting that we use for the governmental fund financials. That top line, which is everything else governmental, ends the year at about $12 million. About $4.3 million of that is restricted. It's bond proceeds, liquid fuels, so you have to use those based on the rules of those funds. About $3.2 million of that is committed to park improvements, fire apparatus, and then there's about $4.3 million of that which is assigned for future equipment needs. So all of that 11.9 is sort of dedicated for specific purposes. The last page here, I just think it's interesting. A lot of boards that I meet with enjoy seeing it. It's a little bit of me pulling back the curtain a little bit on what we do as part of the audit. The balance sheet, your assets, your receivables, your payables, we tie a lot of that out to supporting documentation, supporting schedules, supporting documentation for all that. A lot of the revenue is confirmed with the tax collectors, with the EIT collector, or it's tested. We just look at support for the money coming in. Expenses is one area that we try not to get stale on. The idea here is not to look at the same expense accounts each year or the same vendors each year. So we actually use a lot of data analytics in our process. One of the things we do is we get the general ledger from the township, which is every individual transaction of the township for the year. And we run it through our data analysis tools, and we get a lot of different charts and ways to look at the data. This is a Benford's chart. Benford was a mathematician who determined that any large, randomly occurring population of numbers, about 30% of the time, the first digit would be 1. About 22% of the time, the first digit would be 2, 3, 4, 5, so on, right down the curve. This is your actual data for 2020. The thousands of transactions that the township had, and you can see that you fall right in the curve. Usually what the software will do is it'll ping things yellow if it looks a little weird, or red if there's something we really have to look into. This chart almost always looks this way. So what we actually end up doing is, and I don't have a copy of it here because it's very large and hard to scan, is we go to the first two digits. 11, whether it's $11, 110, 1,100, whatever it would be. And that's where we start to get some sort of pings in our testing. And that will drive some of our expense testing. So a lot of times it's recurring payroll, every other week, the payroll for a certain group of employees is usually the same amount, or it's a stipend in payroll, or it's a telephone, expense, something like that. So we did do this on the 1 digit, we did it on the 2 digit, and then we use that to dig into certain expenses and make sure there's nothing unusual going on, and nothing unusual was going on. Some other things I have listed down there at the bottom that we do pivot table analysis. We'll lay out the data month to month. We'll also compare that, not just month to month within the year, but to the prior year as well. So we can look at January 2020 compared to the rest of the months of 20, also compare January 20 to January 19. And again, we're just looking for any unusual peaks or valleys in the Predictive analytics, this is when they're reviewing their audit, so we do have a few years of history. So another one of the things we'll do is look at the past few years and sort of project what we think this year will be, then look at the actual results, and anywhere where what we thought was going to happen differs from what actually happened. Again, that's where we aim our procedures. W-2, we look at every individual employee's W-2, look for any unusual fluctuations, ask questions, we'll investigate that as part of our audit. We look at journal entries, we also look at your vendors as well for any expense process. So again, just pulling the current rule back a little bit on some of the things we're working on. So with that, I think that's all I've got. Happy to field any questions if you have.
Okay, we'll start with questions from board members. Any questions?
First, one.
Go ahead.
Louder, please. You had mentioned about the minimum municipal obligation.
Yep.
So it was based on 2017 for 2018, 2019.
Can't hear you. Can you speak in the mic, please?
Mine is not working. But when that will be recalculated and changed starting next year or this year?
It's done every other year. So it's done on the odd years, 1/1/17, 1/1/19, 1/1/21. So 1/1/21 should be getting done now. Well, like your 2021 MMO for this year had to be finalized and approved in 2020. So your MMO for this year is still going to be based on the 1/1/19. I'm assuming if the 1/1/21 valuation gets done quickly enough, that could be used in time to calculate your 2022 MMO that's got to be approved this year. So it's time.
Yeah. Okay, thank you.
Sure.
So you're saying there is a chance that if we do it quick enough, that could be significantly reduced based on the fund balance?
I believe so. I think that would be, usually the 1/1/21 valuation, I think it's a 15-month deadline. So it's not really, doesn't have to be completed. I believe it's until the end of March 2022. But certainly there'd be an advantage in getting that done earlier if your actuary can use that for the 2022 MMO.
Thank you.
Any questions? Jack?
Yeah, Chris, and this might be more of a comment, and you didn't put this particular one up, is the general fund budgetary comparison schedule. And I'll give you a minute to find it, page 78.
Thanks. Got it.
Okay, and again, it might be more of a comment, but also a question, is you pulled this information, of course, off the township records. At the bottom, you have a fund balance at the beginning of the year, which would be January 1st, 2020, of 4.4 million, rounded off. So we had a surplus at the start of the year. That's a question.
Yeah, that would be your beginning fund balance in the general funds. That would be assets in excess of liabilities, correct?
Correct. Okay. At the end of the year, after revenues, which of course were way down, over 1 million, down for which you went through for 2020, expenditures were about even. We were only off about 144,000 from what I see under expenditures. Correct?
Yes, under expenditures, yep.
Okay, so we hit the budget on that from your numbers, and the net result was we have a fund balance at the end of 2020 of 2.7 million surplus.
Yes.
Okay, I just wanted to make sure I understood the numbers that I was looking at.
Yeah, when you look at just that actual amounts column on its own, which is really, that's the same as the column up in the fund financials. So yeah, you had 10.4 million of revenue, you had $12.8 million of expenses, you had about $2.3 million loss at that point. You had transfers into the fund, net of roughly $570,000. So at the end, yeah, there's a loss of $1.7 million in the general fund for the year.
Yeah, so after the 4.4 at the beginning of the year leaves us 2.7.
Yep, get into it a little bit.
Okay, yeah, thank you.
Sure.
Any other board member questions? Okay, we'll be taking questions from the public. I'd ask you to raise your hands, and then when it's time for you to ask your question, go to the microphone. Mr. Hughes?
Well, I have a couple questions. First, Chris, could you leave your card on the table for me later? And just a request.
Talking to the mic.
Just a request here, if you could date these documents as today's date, the date that you presented it. There's no date on these.
I'm not required to date these or not.
Well, I'm making a suggestion so we know the day that you presented it to us.
This is a time for questions, please.
Do you understand, is this a comprehensive annual financial report?
No, it's not.
It's not?
No, you're referring to the comprehensive annual report, which is a GFOA special report that very few municipalities in the state actually do. It involves additional analytics, a statistical section at the back summarizing 10 years of annual data.
What's the name of this? I don't need an explanation. What's the name of this one?
This is a financial statement.
Just a financial statement?
Correct, sir.
Nothing else?
Financial statements and supplementary information.
Did you express an opinion on the financial statements?
Yes, we do.
Okay, so this was just a regular general audit then, basically?
It is an audit of the financial statements of the township.
Yeah. Okay, so it's in order?
Yes, sir.
Okay. So, did you know that according to state law that, or what's your impression on an audit? Do you think that you have all year to bring forth an audit to the people of this township? Because this audit is for us. It's accountability of our government.
Please, just the question part. You asked a question, let me answer it.
Do you have a deadline? Do you think there's a deadline? Or can you just bring it in anytime you want?
We complete the audits at a time when we have received all the data and are comfortable with being able to issue an opinion on it.
So is it fair to say then that our government failed to give you the data in a timely manner to complete the audit in 90 days after the calendar year end?
No, it's not. I mean, one important
Well, you just said
consideration.
you.
Excuse me, let him answer.
Yeah, I mean, one important consideration to remember is that most governments can't even close their books until 60 days after year end due to the recording of accruals. Most municipalities I work with, I have a number of 2020 financials that still haven't been issued. So this in July, this was probably one of the earlier financial statements that we issued for the 2020 year end. So I was very happy with the speed of the
Okay,
data I was
all
getting
right.
back.
I got enough information. Could you bring up the estimate slide here?
Sure.
I have a
I don't have
question.
control over that.
Here we go. We have
Louder.
Please stand to the side, thank you.
we've overfunded the police plan pension fund by almost $12.5 million. Whose money is that?
That's an restricted trust, so that is really the police pension plan's money.
No, it's not. It's our money, because we only get the fund 100%.
Excuse me.
I'm coming up with a question,
Questions.
I'm just prefacing the question here. So, it's possible for our township to pull that money out of the police pension fund since it's 100% funded. Think carefully before you answer
Is
that.
that a question or a statement?
That's a question. As I said, is it possible?
My understanding is that that is a restricted trust, and that cannot be pulled out.
Can you speak up so I can get that? It's a restricted trust? Is that what you're saying?
That's my understanding. That there's funding.
Excuse me, Chris, if there's a question that you're unsure of the answer,
Yeah.
I would rather you
No,
not.
that's fine. No, to the best of my knowledge, when contributions are made into the pension
And we-
fund, that's
we
a
get the answer
irrevocable
to
restricted
that.
trust.
Okay, but if you're uncomfortable, we will gladly get the answer to them, rather than give wrong information.
I appreciate it.
Okay, I'm not gonna get any straight answers out of this, so I'll end my question here. Could I get your card, please?
Here you go.
Thank you.
Sure.
Any other questions? Okay, thank you. Thank you, Chris.
Thank you. great night.
Thank you.